All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world. Happy Thursday, everybody. Today is June 12th, 2025. And the top story this morning, sadly, is Boeing. Not because Boeing, but because of the people that were on the Boeing plane. There was a plane crash in India overnight. It was a Boeing 787 plane. It crashed shortly after takeoff. 242, 244 souls on board, depending on which report you go by. And unfortunately, it looks like the death toll will probably be even higher than that because it crashed into a residential neighborhood. No word yet on the cause. There is video of the crash. Just a warning to you guys, I'm not going to show it, but there is some pretty horrific stuff going around on Twitter this morning surrounding that crash. Look, we don't know what it was. It's a sad, very sad story. Obviously, this is a finance channel, so of course we cover the financial angle to everything. It's not to put numbers attached to the value of human life. It's just the nature of this show. So we have to talk about it. The effect on Boeing stock, it was pretty significant. At one point this morning, it was down over 10%. It has since recovered some of those losses. It looks like investors are not sitting around waiting to find out the cause. Boeing has a sordid history, obviously, going back to the crashes surrounding that anti-stall system and all of the companies. Many second, third, fourth chances the government has given them. Look, this was just like a week ago or 2 weeks ago that Boeing was given a, what do they call it? An agreement to avoid prosecution, basically a deferred prosecution agreement in order to avoid being prosecuted for violating its previous deferred prosecution agreement in order to avoid being prosecuted for covering up the cause of the crash. And they knew about it ahead of time and hundreds of people died. So, saying all these negative things about Boeing, it's not an attempt to assign cause yet. That's not what I'm doing here. It's just to explain why investors are not sitting around and why they are just kind of reflexively dumping the stock this morning. Maybe it turns out this was human error. Maybe it turns out it was bird strike. Honestly, I don't know. I'm not an accident reconstructor. We'll just have to wait and see. But that is the big news this morning. Boeing stock down big. It's weighing heavily on the indexes. Now, also big news this morning. We got a lot of economic data just a few minutes ago at 8:30 a.m. Eastern time. The one that really jumped out at me was continuing jobless claims. All right, while initial jobless claims were the same as last week, which has been an elevated level recently, continuing claims spiked by about 54,000 from last week. That is a new high for this cycle. Basically, the highest amount of continuing claims, 1,956,000, so about 1.956 million. The highest we've seen since the recovery from COVID, that huge spike we had in COVID, and then it came right back down. This is the highest continuing claims we've seen since then. And look, this is throwing a lot of cold water on that air quotes strong jobs report that we got last week. And I was saying on Friday that I thought the media's reaction, the financial press reaction to that jobs report, that non-farm payrolls on Friday, was a total whiff. I think they got it wrong. Everybody was just like, nope, headline number's bigger. It's a win, number go up. And everybody just glossed over 95,000 in downward revisions. Everybody just glossed over hundreds of thousands of full-time jobs lost. What was the number? I wrote it down yesterday. I was looking at this. 623,000 full-time jobs were lost in May. Oh, but don't worry. We gained 33,000 part-time jobs. So we've got that going for us. That was an awful, dreadful jobs report on Friday. The media sold it to the public as a big gain. It wasn't. And now the continuing jobless claim numbers this morning is supporting my take that the labor market is continuing to weaken, not showing sign of resilience. So the other thing that's going on this morning, we got a PPI, or producer price index. This is a lesser followed inflation metric. That came in this morning as well at the same time as those jobless claims. Now, it came in slightly below expectations by most measures, emphasis slightly, but it was also up from last month by most measures as well. So overall, I would say PPI was cool. It was not as hot as some had feared. Either way, whether the market is reacting to PPI or to those higher than expected continuing jobless claims, we have seen stocks start to rally slightly ever since 8:30 a.m. this morning, about a half hour ago, 40 minutes ago, because both of those data points, a cooler PPI and higher than expected jobless claims, those are both points for a more dovish Fed. Now, right now, the market is saying the Fed will not act in June. I have no reason to believe the Fed will act in June, but we're starting to see a higher and higher likelihood of rate cuts being priced in for months like September, follow-up months. So the market is enjoying this weaker than expected labor data and saying it means the Fed is going to lower rates, prop up my stonks, and therefore number go up. So we've got that going on this morning as well. Also, we got some geopolitical risk is heightened. And look, take your pick. There's been plenty of geopolitical risk to go around these last few years. But yesterday afternoon, there was orders were given from the U.S. State Department to embassies. Basically, every embassy within missile range of Iran was told, take the non-essential personnel out of there. They were told to come up with action plans to beef up security. At the same time, the UK MTO, or Maritime Trade Organization, issued warnings to ships transiting the Strait of Hormuz to watch out for Iranian missiles and fast attack boats, pretty much. This is all centering around talks of the the Iranian nuclear program, and it looks like those talks are not going well. Look, what's been going on, we've been having these talks. There's been all kinds of saber rattling on both sides. The U.S. was moving its bomber fleet around. That's saber rattling. But at the same time, the Israelis have been sitting here saying, we will not tolerate a nuclear Iran. And there's been stories about President Trump has been getting pretty irate with Israeli President Benjamin Netanyahu saying, no, don't attack Iran while we're talking. Stop that. Don't do that. Don't mess with my talks. We're going to make a deal. It's going to be a big, beautiful deal. That's pretty much how it goes. Well, it looks like those talks are not going well. And if those talks are not going well, the U.S. doesn't have to attack Iran. All the U.S. has to do is stop telling Israel to not attack Iran. So there was a lot of talks yesterday about how the U.S. was about to bomb Iran and, any military action against Iran will be a major escalation. That's not how this is going to work, guys. It's going to be the U.S. is just going to say, you know what, Israel, we tried to talk him out of it. You guys go ahead and you handle it your way. Either way, tensions further inflamed in the Middle East here. And look, guys, everybody's saying, we couldn't have a war with Iran. We're fighting the Iranians now. Who do you think we were fighting in the Red Sea? Do you really think it was the Houthis that we were fighting in the Red Sea? It's just another Iranian proxy. Who do you think Israel has been fighting in Gaza? Do you think it's the Palestinians or do you think it's Hamas? And where does Hamas get all their weapons and money from? Iran. Who do you think Israel was fighting in Lebanon? Where do they get all their money? Where does Hezbollah get all their weapons and all their money from? From Iran. So Iran has been fighting these proxy wars with the West, with Israel, and with the United States all over the Middle East. So would it be an escalation? Yes. Look, the Israelis and the Iranians have traded missiles and bombs several times in the last few years. And yesterday, it looked like it was an increasing likelihood. Now, I would add the price of oil. It rallied initially yesterday, but it's kind of sitting still now. So oil is not really confirming this geopolitical tension, but it is worth keeping an eye on. Also going on this morning, the U.S. budget deficit has hit $316 billion year to date as of the end of this month. That is about 14% higher than this point last year. So how's all that talk about cutting spending going? You guys think maybe you want to get around to cutting spending? Oh, no. I'm sorry. It's just an idea. I mean, it's only been 200 years since we've been increasing this national debt. It's only gotten to $36 trillion. You know what? Take your time, guys. No hurry. I mean, what's a few trillion among friends anyway? Look, this is being driven largely by higher interest rates, which are driving up the interest cost on the national debt. Interest on the national debt is now bigger than our defense budget. Only Social Security and Medicare are bigger expenses than interest on the national debt. So, let's not do anything about spending cuts. Let's wait until interest on the national debt is even bigger than Social Security and even bigger than Medicare. And then we can have a serious talk about still doing nothing about cutting spending, because both parties are in on this problem. They both love to spend money that they don't have and that doesn't even exist. We've got the UK economy shrank in April thanks to tariffs and taxes and capital flight. We've got Oracle earnings beat, but the stock is rallying mostly because of some very lofty guidance, courtesy of a CEO, Larry Ellison, who is known to overpromise and underdeliver. What do we got? Another apparel maker is in trouble, saying some big things about China that might be worth looking into. And commercial real estate. You guys remember that one? Oh, we got one of those data points in commercial real estate, courtesy of Triple Net Investor this morning. Yikes. Buildings selling for about what it would cost to replace the carpet on the floor. But remember, we've been hearing for years that the bottom is in commercial real estate. And I'm sure any day now, these office buildings are going to be worth big bucks once again. Or maybe it's just a bunch of crap and there's no price discovery anywhere in this markets, and we're just hiding it while selling all this stuff financialized into pensions and retirement plans. We got a lot to talk about this morning. Why don't we shrink my big melon of a head and let's see what's happening in the world today. It's a busy one this morning, guys. The S&P futures right now are down by 12 points, 0.21% lower. Here is the reaction, I think, driven mostly by that Boeing crash. We saw stocks were heading lower, and then at 8:30 a.m., we got that economic data. We got that slightly cooler than expected PPI, plus that much higher than expected continuing claims. Stocks rallied a little bit on that news because Fed. Meanwhile, we've got the Dow is still down by 148 points, 0.35% lower. That's all Boeing this morning. And we've got the NASDAQ is lower by 41 points or 0.18%. Stocks down pretty much across the board. The DXY, meanwhile, we have got the dollar continuing to weaken here. We got a 97 handle on the Dixie, off by another 85 basis points this morning at 97.80. Guys, take a look at a long-term trend of the DXY this morning and look at this thing continuing to fall here. We have now hit the lowest level. Let's scroll way back to March of 2022 was the last time the dollar was this weak. Hey, wasn't that exactly when they started quantitative tightening? That's interesting. And you will also notice that we peaked in January at around 110 on the DXY, and we have been heading lower ever since. Guys, weaker dollar, that is very good for asset prices. And looking over at the bond market, we have got yields falling this morning. That is bond prices rising. Again, asset prices heading higher. The 30-year Treasury, 4.845. That's lower by 6.5 points this morning. The 10-year is at 4.354, off by almost 6 points. The 2-year, 3.883, off by 6 and change. And the 1 month is down by 0.5 point at 4.243. So we got a seriously weaker dollar. We've got lower interest rates. That should be good for gold prices, and it is. The price of gold is rallying again this morning, up by $29, $3,384 for spot gold. That's 0.87% higher. And we have got a 34 handle on those front month August gold contracts now as well. Gold is looking pretty good here. However, silver is sitting out this rally, 36.14 for spot silver. That's off by about a dime or 0.25% lower, but I still like the shiny. We've got copper is down by about 0.25%. Platinum is lower by 1.25%, although platinum has had one hell of a run these last couple of weeks. Palladium is off by 3.2%, and crude oil is lower here by 1.5%, $67.10, giving up most of its gains from yesterday. So again, oil not really confirming that Middle East tension. That is important to keep an eye on there. Just wanted to show you guys the chart in gold here. This is important because we're seeing gold rally again this morning. This chart is still intact, guys. This chart of significantly higher lows and higher highs. Now, we still haven't really closed above this 34 and change level, but I suspect within the next couple of days, we're probably going to be challenging that level. This uptrend that started at the beginning of the year is intact. Gold looks good here, and if geopolitical tensions are on the rise, that is certainly going to help as well. We got some interesting things from Jeff Gundlach talking about gold this morning here in Market Watch. Gundlach says gold is no longer for lunatics. As the Bond King says, wait to buy the 30-year Treasury. By the way, I just want to send a shout out to all my fellow lunatics that are watching out there who have been buying gold this whole time. Guess what, guys? The ranks of the lunatics are growing. The moon holds sway over more and more of us day in and day out. And now Jeff Gundlach is getting in on that. Gundlach noted that markets are behaving strange and differently in an interview with Bloomberg late Wednesday, noting how the dollar index and treasury yields fell during the April stock pullback, the opposite of what was seen in the S&P 500 corrections in the last 15 years. And we were observing this during April as well. We were saying, guys, these historical correlations are breaking down here, and this is very good news for gold. And it looks like Gundlach saw that too. I think what we have is a recognition that the interest expense for the United States is untenable. If we continue running $2 trillion budget deficits, which we will, and we continue to have sticky interest rates, there's an awareness now that the long-term treasury bond is not a legitimate flight to quality asset. And if you just read that and you're thinking, oh boy, gold is going to rip, well, you're thinking the same thing I am, because if long-term treasuries are not a flight to safety, then what's left? Pretty much gold. It's not responding to lower interest rates. It's not really responding to an inflation rate, which is now 2.5% and likely to go higher. The manager, who's nicknamed the Bond King, said they are very involved in the long-term 30-year treasury bond because of its belief that yields will rise when the U.S. economy starts to weaken or the Fed cuts. In other words, they're short the 30-year. They're betting on higher interest rates. He's waiting for the yield to possibly hit 6% and trigger quantitative easing. You could get a 20-point rally on the long bond if they announce they're buying the long bond, he said. But Gundlach said that while the long bond is no longer a flight to quality asset, gold is. I think of gold as a real asset class. It's no longer for lunatic survivalists and wild speculators, with central banks also buyers. In other words, the lunatic survivalists were right. How about that? As for the U.S. stocks, he said while the market was really overvalued ahead of the April sell-off, it's more overvalued now because the S&P 500 is lower and earnings estimates have been cut significantly. Actually, the S&P 500 is higher than it was at the start of all this mayhem, but I digress. What is he expecting? I anticipate a great buying opportunity. I don't know when it's going to happen, but it's getting close, he said. The environment feels a lot like 1999 relative to AI is just mapover.com. I also think it feels a lot like 2006 and 2007. And gosh, if the Bond King Jeff Gundlach isn't saying pretty much exactly what I've been saying for the last few years now. Wow. So I really enjoyed that one this morning. It seems like Gundlach is now a fellow lunatic. Also going on in the commodities world this morning, Bitcoin is down for a second day, $107,010 as priced on Coinbase. It's had a rough 2 days. Bitcoin is not getting in on this rally in gold here, but still threatening to make new highs here. Bitcoin has been making higher highs and higher lows for quite some time now. Also a reminder, guys, on Bitcoin, as we near crypto winter, it's worth pointing out that there are still lawsuits being settled from the last crypto winter. Shaquille O'Neal to pay $1.8 million to settle FTX investor lawsuit. There was a lot of FTX investor lawsuits, guys. As a matter of fact, some of my peers, if I might call them peers, because these guys are like 100 times the size of my channel, some of the biggest names in financial YouTubes, some of whom you may have met, wink, wink, were taking big money from FTX. Some of them in this article, they talk about were paid $2,500 every time they mentioned FTX. And those guys all had to settle lawsuits too. Keep that in mind, because there are a lot of channels out there that are pumping shit coins and altcoins and DeFi scams right now because number go up. A lot of them had to write checks last time, and crypto winter is coming. So we always hear from the guys who take the money, just a little something from the people who don't take the money from the scammers. And also in Bitcoin news this morning, GameStop is trying to do the Michael Saylor infinite money glitch, and it's not working this morning. GameStop shares tank on convertible bond offering to potentially buy more Bitcoin. We're not going to get too deep in the weeds here, guys, but I just want to mention, I've mentioned this a couple times, that these Bitcoin treasury companies are becoming a dime a dozen. Everybody is now doing what Michael Saylor did, taking out debt to buy Bitcoin. We are seeing leverage build up at the corporate level, which is no different than leverage building up at the individual level. This is all going to say that, look, leverage building up, frothy speculation, fraud on the rise, all signs that crypto winter is just around the corner. Be careful going out on leverage to buy crypto. All right, now here's the main story of the day. Air India operated Boeing crashes after takeoff. Reports of either 242 or 244 souls on board. That may seem like a trite detail, but I would imagine that's a very big detail if you're one of those two additional people. An Air India passenger plane bound for London with more than 240 people on board crashed Thursday in India's northwestern city of Ahmedabad. I apologize if I'm mispronouncing that. Visuals on local television channels showed smoke billowing from the crash site in what appeared to be a populated area near the airport, with a population of more than $5 million in the capital of Gujarat, Prime Minister Narendra Modi's home state. Firefighters doused smoking wreckage of the plane, which would have been fully loaded with fuel shortly after takeoff, and adjacent multi-story buildings with water. Charred bodies lay on the ground. Again, guys, there's some pretty grisly images going around on Twitter. The airline said the flight was carrying 242 passengers and crew. Of those, 169 were Indians, 53 Britons, 7 Portuguese, and 1 Canadian. It was a Boeing 787-8 that crashed into a residential area called Megani Nagar 5 minutes after takeoff. He said 244 people were on board. It's not immediately possible to reconcile that discrepancy with Air India's efforts or numbers. All efforts were being made to ensure medical aid and relief support at the site. Look, guys, we don't know what caused this crash. It's still too early to announce what it was. That being said, investors not sitting around and waiting here. The stock, it's currently down 5.7% ahead of the opening bell. This stock was down more than 10% at one point this morning. We don't need to revisit all of Boeing's sordid past. It is pretty extensive here. Not saying this was Boeing's fault, but in the off chance it is, people are selling the stock this morning, $202, even down $12. All right, now let's talk about this labor data that came in. Initial jobless claims in the U.S. held steady at 248,000 for the first week of June, unchanged from the prior week. All right, here's your initial jobless claims. Now, the fact that they're unchanged from the prior week, that shouldn't be very reassuring because they are unchanged from a pretty high level, about 250,000 people filing initial unemployment claims a week now, significantly higher than the range we had been in for the last few months. But that is not the big takeaway here this morning. It's this one: continuing jobless claims in the United States increased to 1,956,000 for the week ending May 31st. That is up from 1,902,000 in the prior week. 54,000 more people on the continuing jobless rolls, and you can see that in the chart. Yeah, that one stands out. All right, that is a new cycle high by a huge margin. And so we're seeing the same thing. Maybe there's not an alarming rate of people losing their jobs, although there is an elevated rate of people losing their jobs. But there is no opportunity for the people who lose their jobs, and so the unemployment rolls are piling up. And I'm telling you, this is a really bad number, and this flies in the face of the media's glowing coverage of that jobs report last Friday. And again, everybody just reads the headline number. Nobody opens up the attachments. Nobody looks at the charts. They just like, oh, no, the headline number is big. Never mind the downward revisions and everything else, all the granularity in the data. That jobs report on Friday sucked. I said it on Friday. Here is another data point that supports we are seeing significant weakening in the labor market once again this morning. Also, guys, I just want to take you through some of the stuff that was said yesterday. We talked about this in the open, the Iranian story. This is OSINT Technical, which is one of those military channels that I follow on X. The U.S. has ordered all embassies within strike range of Iran, including ones located in Europe and North Africa, to convene emergency actions, meetings, and communicate back measures they are taking to mitigate risks, per the Washington Post. That also included evacuating non-essential personnel. At the same time, we had the UK MTO, that is the Maritime Trade Operations Authority, kind of like the Coast Guard / Navy. The UK MTO has been made aware of increased tensions within the region, which could lead to an escalation of military activity having a direct impact on mariners. Vessels are advised to transit the Arabian Gulf, Gulf of Oman, and Straits of Hormuz with caution and are to report incidents or suspicious activity to the UK MTO in accordance with BMP. I don't know what BMP means. Probably best maritime practices. So they're warning ships in the region. What else did we have? We had Senator Tom Cotton. He's beating the war drums here as a Republican senator. He's saying today the Secretary of Defense confirmed that Iran's terrorist regime is actively working towards a nuclear weapon. For the sake of our national security, the security of our allies, and millions of civilians in the region, this cannot be allowed. Kind of making excuses for military action against Iran. And we even had President Trump was asked yesterday why U.S. personnel are being moved out of the Middle East. And Trump said U.S. personnel in the Middle East, are being moved out. It could be a dangerous place. We'll see what happens. Iran cannot have a nuclear weapon. We won't allow it. Not necessarily saying directly we're going to attack Iran. Again, in my opinion, I think it will be most likely the Israelis. If anyone, the talks are still ongoing. It's important, guys. This could just be saber rattle and bluster and bluff. This could just be both sides talking up a bigger game, playing brinksmanship in hopes of securing a better deal. All right, let's hope that's what it is. The fact that oil prices are down this morning tells me that's probably what this is. That being said, accidents happen. Let's not play this stupid game. Meanwhile, U.S. budget deficit hit $316 billion in May with an annual shortfall up 14% from a year ago. Let's not spend too much time on this, guys. There are some silver linings here, like the monthly deficit in May was smaller than the monthly deficit in May of 2024. So we got that going for us. But the year-to-date shortfall is up significantly, double-digit percentages. It's being driven almost entirely by higher interest rates. We were supposed to cut spending. You were elected to cut spending, Congress. President Trump, you were elected to cut spending, and you're not cutting spending. Spending is increasing. Explain yourself. All right. Oh, I don't want to hear we need a big, beautiful bill, and we need this, and we need to secure all this other. Nope. Cut spending. That's more important. The accumulation of debt is the single biggest existential threat to the United States' status as the world's lone superpower. It's not China. It's not Iran. It is the debt spending. Get this crap under control. Off soapbox. Meanwhile, the UK economy shrank sharply in April as Trump's tariffs and tax rises kicked in. The UK economy shrank sharply in April by 0.3% month over month. That is versus the 2% growth that we saw in March. They're blaming a lot of this on tariffs. And yes, tariffs are certainly part of this story because they did mention a big drop in exports. Where is it? With a 20% levy slapped on EU exports, Britain has since struck a trade deal with the U.S. The UK was hit with a 10% reciprocal tariff from Trump, despite having more or less balanced trade with the U.S. We did see a pretty sharp decrease in UK exports to the U.S., but we also saw sharp tax increases in the UK. Domestic tax rises have also been blamed for the steep decline in economic activity. British businesses have been confronted with an increase in the national insurance contributions and a rise in the minimum age from the start of April, while I think they meant to say minimum wage there, while a temporary tax break on property purchases also came to an end in March. The change in the stamp duty land tax paid when buying property or land in April meant there was a decrease of 63.5% in UK residential property transactions from the previous month, with buyers rushing to complete purchases before the tax break ended. Yikes, that really killed their real estate market. And that's not the only tax problem the UK has. Britain counts the mounting cost of taxing wealthy non-doms. The UK government, it says, ending special tax privileges for the rich will bring in billions, but a growing exodus is putting those claims to the test. You got capital flight in Britain. Wealthy people are leaving. It's funny, when you tax people, they leave. We see the same thing in the Northeast. People are fleeing taxes for the low taxes and shiny weather in Florida. As the pace of wealthy individuals leaving London quickens, the numbers are starting to stack up. Labour's flagship tax the rich policy risks becoming a net drain on the UK economy. A Bloomberg analysis of 5 million company filings shows a big spike in departing business leaders over recent months, with more than 4,400 disclosing an overseas move in about the last year. A wave of recent studies warn the UK will lose thousands of jobs and as much as £12.2 billion over the coming 4 years if non-doms leave at the pace that many advisors are predicting. It's all setting the stage for the biggest exodus of wealth in the UK's recent history, as a nation that once prided itself on being a hub for the global elite risks a potentially serious and unforced economic own goal. The government bets the changes for non-doms will bring in about £33 billion in extra taxes, but dissenting voices are giving far harsher predictions on the hit to jobs and economic growth. Guys, taxes are not the problem. Governments around the world are collecting more money in taxes than ever before. Tax revenues are on the rise everywhere, and yet the debt keeps getting bigger because you're spending too much money. That's the problem. Stop spending money. You cannot tax your way out of this situation, guys. We need to stop wasting money on stupid crap. Meanwhile, Oracle stock jumps on earnings. They were strong, but this was stunning, says an analyst. We're getting a little light on time here, guys, and I have a few others I want to get to. So I'm just going to run through this pretty quick. Oracle earnings were pretty good. It was a beat on the top and bottom line. There were some things, their cloud revenue was a little bit less than expected. And cloud revenue, that's where their AI data centers live. So that's a little worrying, but everybody's talking about this massive forward guidance that Oracle just issued. Oh my God, the guidance was so insane and the stock is ripping. Worth pointing out that Larry Ellison has a history of overpromising and under-delivering, as well as getting way too many facelifts for a grown man. But I digress. Oracle is rallying on that guidance despite the history of missing it. Oracle stock up now up 9.2% on this news, $192.41 for shares of Oracle. Maker of Tommy Bahama says consumer caution is affecting fundamentally everything we sell. This is another apparel maker who is in big trouble here. And again, we're a little short on time, so I'm going to rush through some of these stories, guys. But the one thing I wanted to take away, they're seeing big drops in their sales, big drops in their forward guidance. But I do want to say this. Chubb said during the call, that's their CEO, that by the second half of 2026, the company plans to be substantially out of China. He said the company began sourcing its clothing internationally more than 50 years ago. Over that time, he said there have been major changes to trade policy, such as NAFTA and China's inclusion in the WTO. The only difference this time is the policy change has come with less notice and more fluidity than with past changes. So apparel makers, we've had several discussions in recent weeks about how the people selling clothes are in big trouble here. Here's another one. What's the name of this company? This is Oxford Industries that makes Tommy Bahama. And they're saying we are getting substantially out of China. So it doesn't necessarily mean they're bringing their manufacturing to the U.S., but they are getting out of China here. Oxford Industries stock down 7 2/3% here, $46.22. That's off by $3.83. It's a tough time to be in the apparel business. Now check this one out. Shout out to Triple Net Investor. I follow this account on X. He's a pretty good account to follow for commercial real estate news. And man, look at this story. And we've seen a few like this. A downtown Minneapolis office tower that sold for $200 million in 2016 recently traded hands, but this time for just $6.25 million. Now let's do a little bit of a quick back of the napkin math here. 6.25 over 220. That is down by roughly 97% since 2016. Tell me, guys, do you really think commercial real estate funds have reflected this reality? Do you think the real estate investment trusts are reflecting this reality? Or are commercial mortgage-backed securities reflecting the reality of a 97% discount? I should have just kept reading. There's the 97% number. I didn't need my calculator. Guys, this building sold for $6.50 a square foot for a 960,000 square foot office complex. All right. It would probably cost you about $6.50 a square foot to have the carpet replaced in this building. Commercial real estate, the reckoning, the repricing, the price discovery, it still has not happened. There is no way buildings losing 97% of their value is reflected in the price of these debt assets that are still trading at prices back when interest rates were significantly higher and before work from home. So shout out to Triple Net Investor. And guys, keep an eye on that commercial real estate. You know, I think it's time we had Lux Ganapathy and Melody Wright on the channel to talk about commercial real estate. I've been trying to schedule that one for the last week or so. I've had some stuff going on that I just prevented me from doing that. But we're going to get that video done because commercial real estate has kind of fallen by the wayside. That's an important one to keep an eye on. Also, we got producer price inflation for this month. This was a little cooler than expected, which is why I saved it for the end. Headline PPI month over month was 0. We got to refresh this because the chart is not shown. There we go. 0.1% month over month. That's versus 0.2% that was expected. So slightly less than expected, but up from the negative 0.2 that we got last month. Meanwhile, we've got the producer price, less food and energy. This is the core month-over-month number. That came in at 0.1%, up from the negative 0.2% last month, but again, slightly less than expected. So it was kind of a cool report. Let's see, what was the headline number here? The headline number year over year, I got to refresh it, make sure it's accurate. The headline number was 2.6%. The market was expecting 2.6%, so in line with expectations for the headline number, but up slightly from 2.5. Guys, this wasn't, it was kind of a nothing burger PPI. And because people were a little bit worried about higher than expected PPI, this is being interpreted as a signal that the Fed may swing more dovish. Combine that with the higher than expected continuing jobless claims, we got a little bit of green following this data being announced. Whew, we had to rush through a lot of those stories, guys, because I didn't want to run too long. It was a busy morning with a lot of news here. By the way, before we get into the super chats, we had one from yesterday that I couldn't get to. I want to send a shout out to my buddy Eric Rocks, and also thank you to Nan and M&J who got me this message. Eric sent a super chat yesterday, but the message didn't come through. Eric Rocks said yesterday that roses are red, violets are blue. I like the shiny, and so do you. Eric, you're a poet and you don't even know it. Rate your preference. USA 1 ounce Eagles, i.e. silver Eagles, shares of SLV, silver bars, or non-USA 1 ounce. All right, so this is kind of hard to do. So I might have to flash this image a few times. Let me just say right now, in these current market conditions, of those things that you listed, my number one, I would say American Silver Eagles. And the only reason for that is because premiums are so low right now. We've got a lot of people are actually selling their small denomination physical silver in order to make ends meet because inflation has tapped them out. And so gold dealers are actually swimming in inventory right now. They're drowning in inventory even. And so the premiums are way down. And when premiums are way down, that's a good time to buy up your American Silver Eagles, which typically trade at a higher premium to the other stuff, the generic stuff. Now, converse that with, say, a year ago, at one point, we saw American Silver Eagles were selling for as much as like $25 above spot. So if you're interested in trading every now and then, I'd say this is a good time to buy those ASEs, wait for those premiums to blow out. And then when those premiums blow out, which will probably happen at some point in the next few years, then maybe you can trade your ASEs and increase your total weight by trading those higher premium Silver Eagles for some of the generic stuff when the premiums go higher. So I would say number one, the American Silver Eagles. Number two, the non-U.S. denomination silver coins, the non-U.S. sovereigns, for the same reason, because of that premium and the trade prospects. Number three, I would say, would be your generic silver bars. I own a lot of those myself. That's typically the best way to get your weight without paying a lot of premiums. And last but not least is shares of SLV. I'm not a big fan of SLV. It's just an IOU silver. And if we ever do get a reckoning in the paper silver market, which is due at some point, it's bound to happen. SLV shares, you're not holding silver. You're holding an IOU silver, and the big guys eat first, you eat last in that scenario. So really the only reason to use SLV is if you're trying to get price exposure for short-term trades. SLV is not ownership of silver. That's very important. So thank you, Eric Rocks, for that one yesterday. And I apologize it took us a while to get to that comment, but we were able to close that loop. Armando Reyes, thank you for the super chat, sir. He says, we are inching ever so closer to that one domino that will cause full collapse of the whole system. Get your popcorn out. You know, I don't know that it'll be one domino. It's probably a series of dominoes, but I can tell you, of all of these dominoes, there is a common thread, and that is the debasement of currency. All these things, these social strains, racial and, demographic trends and tensions between people. If we didn't keep messing with the money, which disproportionately hurts the poor, then we wouldn't have so many of these dominoes lined up. And so, yeah, all these things that are going on and they all seem unrelated. Fix the money, you fix a lot of those things. And in order to fix the money, you got to fix the spending problem. And there we go, right back to government deficits. Congress, get your stuff together, for crying out loud. It's been so long. We've been harping on this for so long, but they just keep making the problem worse. Thank you, Armando, for supporting the channel, sir. And thank you, Zebo Fritz, who says, thanks for not becoming a dirtbag scammer. Hey, you're welcome. Look, guys, there's money in being a dirtbag scammer. That's all I can tell you. Dirtbag scammers, Most of them do pretty well. There's a lot of money in it. Some of them get caught and have their reputations destroyed. Most of them get away with it. All right. Most of those guys who were pumping FTX, in some cases, one of them, I don't want to list a name, but one of them was talking about BlockFi going bankrupt. And immediately after talking about BlockFi going bankrupt, he mentioned that there was an affiliate link for BlockFi down below and that you could get $50 if you use the hashtag name of his channel when you signed up. In the same freaking breath, he was advertising a company that he just said was going bankrupt. All right. There's a lot of money in being a dirtbag scammer, which is why there's so many freaking dirtbag scammers. All right. It's hard to do this right. Let me just put it that way. But you're welcome, Zebo Fritz, and thank you for supporting the channel. Appreciate that very much, sir. Armando Reyes says, hey, Jack, with low GDP, high unemployment, dollars going to gold and crypto and also debt. Why aren't we seeing more bank failures? Opinion. We are not seeing more bank failures because the banks are not realizing the losses. The floor is price discovery, Armando. The game, the floor is lava and everybody jumps on top of something. That has been going on in Wall Street, right? Got massive losses on the balance sheets of virtually every bank in the country. Those losses are hiding in their held to maturity assets. All right. It's a simple accounting gimmick. We lost hundreds of billions of dollars. Take Bank of America, for example. They lost hundreds of billions of dollars on bonds. And instead of marking those bonds to market, i.e. holding them on their books for what they're worth now, they're holding them on their books for what they're going to be worth at maturity, which could be 20, 30 years from now. That's fine as long as you don't need that money for 20 or 30 years. If you end up needing that money, it ain't there. So that's how a lot of banks have avoided collapse, by doing this held to maturity. It's not illegal, but it's gimmicky and it's not entirely honest. I also, by the way, I did a video yesterday on my friend Travis over at Real Estate Mindset. Travis, shout out to you, brother. Haven't talked to him in a while. I went over on his channel yesterday. We did a video about private credit and private equity. I'm not sure when he's going to be running that, but I talked a lot about how they're avoiding the price discovery in the private asset market. That is a multi-trillion-dollar market, and it is, in my opinion, responsible for most of this money supply growth that we've seen in the last few years. Again, there is no price discovery here, and the banks are not failing because the banks aren't lending to these companies. They're lending to the non-banks, and the non-banks are lending to those companies. And so that debt, which has been lent to companies that don't make any money, is being held on the bank's balance sheet as if it's solid gold debt because it's a loan to a company like KKR, a company like Blackstone. Yeah, they're good for it. They have a good credit rating. But what did Blackstone and KKR do with that money? They lent it to people who can't pay them back. So ultimately, the banks are holding that risk, but they're not marking it accurately. That's why they're not failing, because everybody is pretending their stuff is worth what it ain't worth. See also commercial real estate. Thanks again, Armando, for supporting the channel. Thank you, Lisa B, who says, thank you for facts, no matter the prez, etc. Facts matter. Look, I was pretty hard on the last guy, President Prune Juice, and I'm going to be hard on this guy. I have high expectations and a big mouth. And so when I see him doing things I don't like, I am going to call him out on it. Presidents pumping altcoins, meme coins, shit coins is a new low. Let's just call it what it is, guys. That is a new low. And it's another reason to be very careful in crypto. If the president of the United States is pumping a rug pull meme coin, then the SEC is not going to protect you from whatever the hell is going on in crypto. Be careful. A lot of people are making money. A lot more people are going to get wiped out when this reckoning comes, which is due sometime, in my opinion, between now and October. Thank you, Lisa B, for the kind words and for supporting the channel. Pigo's Trading Desk says 1953. I don't know what we're saying. USA coup. Are we talking about Mossad there? USA coup. Don't forget. Sorry, there's a little too much like code word to avoid things. I'm guessing we're talking about Mossad and Israeli intelligence there. Entirely plausible. Look, the Israelis are not innocent in all of this, guys. And Mossad does a lot of nasty stuff, just like the KGB did during the Cold War, just like our CEA and our NSA, CIA and our NSA does. Look, there is a very reflexive move to just blame Israel for everything wrong in the world these days. I mean, every day in the UN, there is a new sanction being passed or a new condemnation of Israel being passed. And Greta Thunberg hates on Israel now. That's her big thing because I guess she can't make any money fighting climate change anymore. There is one simple fact that a lot of the people that are pumping this stuff, and a lot of it is accurate. I'm not saying they're innocent, but there is one fact that we can't escape. If tomorrow the Israelis were to put down their guns and say, we refuse to fight anymore, every man, woman, and child in Israel would be dead within 24 hours. All right. That is a fact. All right. And I don't live under that threat. And I'd imagine if I lived under that threat, I'd be guilty of some pretty heinous acts myself. If somebody was threatening that to my kids, you better believe I would do some pretty twisted shit to protect them. So I am not going to cast judgment on Israel, because until that fact changes, when the Israelis stop fighting, they all die. All right. That is not true of anybody else in the world right now. It is true for the Israelis. And that's why I don't get down with the whole blame everything on Israel crowd. I know I'm going to take a lot of heat from that in the comments, and I'm probably going to lose some subscribers on it. But I don't say what the algorithm wants. I just say what comes to mind, and I take the good and the bad that comes with it. Sorry, guys. Thank you, Pigo, for supporting the channel. PP Poo Poo says, working for builders first source. Housing in Dayton area to include Cincinnati and Upper Kentucky are doing well. Okay, I follow you. Travis Melody, hoping for a correction soon for all of USA. Working for Builders First Source. I'm not familiar with that outfit. He says housing in Dayton and Cincinnati, Upper Kentucky doing well. All right, so we're talking Midwest, kind of like borderline between the Corn Belt and the Rust Belt there, or some overlap. They're doing okay. That's probably some pretty good data to send over to Melody. Melody does this stuff on the more city level. I'm not a housing expert by any measure, guys, so I don't want to weigh in too much. My opinion with housing generally is so goes the labor market, so goes housing. All right, now there's different ways the government can inflate housing finance, and it changes city to city. But in general, if we're seeing a deterioration in the job market, we should be seeing a deterioration in the housing market. We haven't really seen that. We're just now starting to see housing turn lower. Jobs have been turning lower for quite a while now. So I do think housing is overdue for a correction. Thank you, triple or quadruple P, for supporting the channel. Pigo is back, says, not Israel, Mossad. You see, I'm thinking you're saying Mossad. I don't know what Mossadegh is, that EGH. I'm generally pretty well versed in history, but that word escapes me. Are we talking about Mossad or something else there? I just don't know what that is, Pigo, so I can't really comment on it with any kind of accuracy. I've never seen those last three letters there, so I don't know. Sorry, but I can't really comment. Feel free to shoot me a DM on Twitter if you can elaborate a little bit more on that. I'm not going to try to spitball that one live on the air, but thank you once again, Pigo, for supporting the channel. One last thing, guys. I had my mini-me got hurt last weekend. She busted her arm pretty bad, so for my magnanimous melon heads on YouTube and Patreon, guys, we have to move the Friday Zoom to Sunday night. Unfortunately, I didn't want to do that, but I got a lot of doctor's appointments and things over the last week that I got to take care of. So we got to move the Zoom to Sunday night. I'll be putting out that link shortly. I apologize for throwing the schedule up in the air. It couldn't be helped. She is doing better now, though, guys. So thank you for that. So look for that later. We'll probably be doing Sunday night at 8 p.m. Eastern time, and then we'll be back next Friday to the regular time. And I just want to say thank you, everybody, for supporting the channel. Thank you, guys, for having your coffee with the melon heads. Don't forget that like button and subscribe button on the way out. Hi, Mom. Hi, Dad. I love you guys. Thank you, magnanimous melon heads, and everybody for the super chats. I appreciate that. Links down below should you feel so inclined. Until next time, live small and dream big.